What's going on, guys? It's Arkham. Welcome back to another video. In this video, I break down this hidden strategy that not a lot of people talk about that I use on a consistent basis, and I give you guys an example that made me over $8,000 in just 20 minutes. In this video, I give you guys the exact concept, how to use it, how to frame a daily bias, plus how to get an entry to catching the daily range. Towards the end of the video, for those who stick through, I give you guys a step-by-step trading plan so you guys can implement it into your own trading and find similar results. And if you guys haven't already, make sure you guys are following me on Instagram at Arkham Trades. Now, without further ado, let's get into the video. The strategy we're going to be going over is the Asia range model, but you guys may be asking, what is the Asia range? So the Asian range is between 8 p.m. to 12 a.m. Eastern Standard Time, EST, and during this time interval, price builds up liquidity on both sides of the marketplace. This is usually referred to as our accumulation. We use the Asian range in two ways, is as a draw on liquidity. So let's say the marketplace is reaching higher and higher prices, and then it taps into a higher time frame level of resistance. This could be an order block or fair value gap or whatever. After tapping into that level of resistance, we get a structural shift from higher prices to now lower prices. This is indicative that at this point, price has reached a level to where it can no longer go higher, and we can now anticipate a reversal to then take place. And price tends to use the Asian range as a magnet. So we've already came higher and took out this Asia range high, plus tap into its higher time frame level resistance. Now we're getting this structural shift. We can then now use the Asia range low as a draw on liquidity or a liquidity point to then target for our overall bearish bias, as well as we can use the Asia range as levels of liquidity when it comes to catching reversals. So we have this Asia range here going back and forth, and then we see this drop to the downside, taking out these Asia range lows. Followed by taking out those Asia range lows, we get this break to the upside. Price taking out this Asia range low, then giving this break to the upside, is signaling to us that price has used this Asia range, took out that liquidity from the bottom, and now as it's giving this push higher, it's now shifting structure to then now target these Asia range highs. So we can use it as a draw on liquidity, where if we have a bearish bias, we can then target these Asia lows, or we could use this as a point of entry where we come lower to sweep liquidity, and then let's say there's a fair value gap order block here, we can use it as a form of entry to then reach back higher prices. This is the two ways that we can use and capitalize the Asia range for our overall narrative. Additionally, we can pair the Asia range with standard deviations. So if we anchor a Fibonacci from the low to the high, we can get our standard deviation of -1, -2, 1, and standard deviation 2. How we can use this is if price comes higher, it should not break above this second standard deviation. Instead, it should find rejection either after taking out the Asia highs or tapping into this first standard deviation to then seeing a lower prices. And how we can use this for bullishness, right? If we're anticipating a bullish bias, price should come lower and not break below the -2 standard deviation. Instead, it should find some type of respect either below the Asia lows or at the -1 standard deviation to then seeing higher prices. And if you guys want the Fibonacci settings, well, here you go. So essentially, we have the Asia range between 8 p.m. to 12 a.m. EST. We can use it as draw on liquidity or a level of resistance. And then we can pair the standard deviations with the Asia range to then get our precise entry. Now let's start piecing it all together. So in this depiction here, we're anticipating lower prices. Price comes higher into the Asia range high and then finds a level of resistance at this higher time frame resistance level. This higher time frame resistance level could be some type of higher time frame 4-hour order block, 1-hour order block, fair value gap, right? Some type of resistance here at this one standard deviation. So price comes higher, takes out the Asia highs, find resistance at this higher time frame resistance level, then we get this structural shift, right? You can either take your short entry based off of this low risk entry up here at the higher time frame resistance, or you can take your reaccumulation entry right here as price then starts to distribute. This would then be our bearish example for using the Asia range to frame an entry. And our bullish example would be right here, where price comes lower, sweeps these Asia session lows, comes down into this 1 standard deviation perfectly, and then we get this break to the upside. This is a very good signature signaling to us that price has then taken out those Asian range lows and then get this break to the upside, signaling to us that we had a sweep of liquidity. Then now we have that break of structure. So if we can come back into a level of discount here, right, in this bullish for VAG gap or order block, whichever one you use, you can then take your long entry, reaching back higher prices, aiming for at least a 3-to-1 R on your trade idea. So now piecing it all together, we have two depictions here, one for the London session and one for the New York session. So we have the Asia range here between 8 p.m. to 12 a.m. EST. We anchored our Fibonacci from the low to the high of the Asia range, and we got our 1-2 standard deviation and -1, -2 standard deviation below us. So during the London session, we see this drop lower into this -1 standard deviation, which is also in alignment with this higher time frame fair value gap level, and then we get this lower time frame break of structure to the upside, leaving this last down close candle, which is our order block, right? This gray box here would then be our order block. So as price comes down into this order block level, we can then take our longs just back below that order block low and standard deviation, and as you can see, price comes higher, taps us in perfectly. But let's say you didn't get that entry. Well, there's also another opportunity during the New York session. So New York session would create a manipulation. So we get this manipulation lower to then take out liquidity from those who didn't sell their profits during the London session. So during that manipulation, we take out liquidity plus tapping it into this fair value gap level. So as we take out this liquidity pool in alignment with this fair value gap, this would then be our total swoop entry. And we're going to put our stop loss just back below this previous low here, reaching back above higher prices for a 3-to-1 R. And just like that, we get that continuation higher, right? This is how you would use the Asia range to then frame a narrative to catching the daily range, right? This is very important. Now we're going to get into charts, and I'm going to show you guys some live examples as well as a trade that I took with this exact framework. The frameworks and the strategies that I teach you guys inside of YouTube, I actually use them in my own trading, and I'm going to show you an exact setup that I took, which made me over $8,000. Don't click off the video yet, as towards the end, I'm going to give you guys the step-by-step trading plan so you guys can backtest this on your own and hopefully find success within your own trading. Let's get into examples. Growing up in a third world country like Haiti, living in rat-infested homes and being in poverty, I know what it's like to struggle. And now me and my brother live a life of abundance, and that's solely due to trading. That's why me and my brother have created Spark Trading University, where we have over 60 plus lessons, more than 30 hours worth of information and education shared nowhere else, live trading every single day, weekly progress calls with all of our students, as well as additional bonus lessons and frameworks being presented inside Spark Trading University every week. This is the hub that me and my brother want to create for those who are looking to escape their situation, escape their 9-to-5, and live a life of abundance that they deserve. If we could do it, anyone watching this video can do the same, and it does not have to take long. And if you guys click the first link in the description and join Spark Trading University, and you guys go through a full year and you guys still don't have any results within that first year, we're going to personally coach you one-on-one for additional 3 months until you find results. You seeing success and living a life of abundance is success to us. We want to ensure that everyone watching this video can see similar results. Click the first link in the description and join Spark Trading University and become a part of the community today. Now back to the video. So the first example we're looking at is GBP USD on October 15 during the London session. And some key things that we want to take note of is obviously we have this Asia range by this gray box, and we can see here that during the Asia session here, going into the London session, we've been making lower and lower prices, and we've taken out this level of liquidity below us. So we've taken out this level of liquidity, plus we can identify this bullish for value gap, plus we have this -1 standard deviation, as you can see here. As long as price does not break below this -2 standard deviation, if price can see some type of bounce from this support level, then we can take a reaccumulation entry to then seeing a higher prices for an overall reversal. So our bias is higher prices. Manipulation going into a London reversal, meaning that during the Asia session, we had a manipulation lower into levels of imbalance and taking out liquidity. And during the London session, we can then see this push higher. This is just one of the strategies that you can use during the London session to catch some really big ranges. So the London session is just about to open up. I want to see if we can get some type of break of structure to the upside and then coming back into some type of fair value gap or order block level for a continuation higher. So we can see here that we opened up here at 2 a.m. during the London session, had one more spike to the downside, and then now we get this bullish engulfing candlestick. This is a pretty good indication that price has found respect at this level, given this bullish engulfing candlestick, as well as breaking back above this bearish fair value gap, which then now this becomes a inversion fair value gap. So I'm going to put my entry here just at this inversion fair value gap here. Stop loss just back below these lows, reaching back above higher prices here for about a 3-to-1 R, catching that daily range. And let's see what happens. And as you can see, price comes all the way back up here for over a 3-to-1 R, catching that daily range. But let's say you didn't get this inversion fair value gap entry. Well, throughout the trading range, we can see we had this order block setup right here by this last down close candle. So if you didn't get this inversion fair value gap entry, then we got this bullish engulfing candlestick. As price came down into this last down close candle, this would have been a perfect entry to then get in, and then putting your stop loss back below this previous low, reaching back above higher prices just like so. There's multiple opportunities to get inside the marketplace, so don't be discouraged if you guys miss an initial entry. Just be patient, wait for another entry to come through, and you guys can take that continuation move. Now let's go on to the next example, which is the exact trade I took with my Spark students, which made me a little over $8,000 in just 20 minutes. So we're looking at our next example here, and some key things that we can take note of is obviously the Asia range, 8 p.m. to 12 a.m. EST, perfect. As we can see throughout the London session, we made this push lower, didn't necessarily break through that -2 standard deviation. As you can see, price staying above it, which is perfect. Instead, it reacted off of these long wick levels, which is also referred to as a rejection block. When you guys do identify long wicks inside the marketplace, always take note of them from the lowest body to the lowest wick. And as you can see, these are levels of support and resistance where the marketplace can come down or come up into them to then see some type of reversal. So we can see the marketplace came down into these long wick levels, which is that rejection block, and then it gave this breaker structure to the upside. So we can identify this breaker structure to the upside, reaching back above higher and higher prices. We've already taken out these Asia range highs. Our next level of liquidity is this high up here, as well as continuing even higher, as well as we can identify this bullish fair value gap below us, which as you can see, price came close to taking out that bullish fair value gap, but it didn't necessarily tap into it. So this is a level that's still unfilled inside the marketplace, which is also in alignment with this breaker. So we have this low, then we have this high, then we had this lower low. So this last up close candle then becomes our bullish breaker. So this is a strong level inside the marketplace with multiple points of support. Not only did we identify that breaker structure after tapping into this rejection block, which is bullish, we didn't break through this -2 standard deviation. Perfect. Then we can identify this bullish fair value gap plus bullish breaker, which is a unicorn setup, which is a high win rate model. So that's 3 out of 3 things that we can identify in this one setup alone. So as the marketplace opens up, if we can see a break back below here, this would be a perfect long entry in A+ setup to then capitalize on the marketplace, catching that daily range, continuing to see higher and higher prices. So I'm going to put my long entry here just at the opening of this breaker, just back below the -2 standard deviation, because if price breaks through this -2 standard deviation, this would then be my indicator that price, okay, it has broken through this -2 standard deviation. I was anticipating higher prices, but now it's looking like it's going lower prices. I'm going to step away here, and I'm going to target back above higher prices for over a 3-to-1 R. Let's see what happens. And just like that, we can see the marketplace coming down, tapping into our breaker level plus fair value gap. And then we see that push to the upside, just like so, for over a 3-to-1 R in just like 15-30 minutes. It can really be that simple sometimes. You guys don't have to overcomplicate your trading at all. But let's say you didn't get an entry down here. Let's say this was too quick, because the Dow Jones can move pretty quickly. Well, price does create this bullish fair value gap right here. As you guys can see, there's a bullish fair value gap right here on the 50 minutes. If you guys weren't able to capitalize on that long entry down there, you guys can easily capitalize on this one right here, right? Just like I said in the previous video, don't try to rush the market or try to chase it, right? Always be patient and wait for another opportunity to present itself, because it will. So if you missed the initial entry, you can take the second entry right here inside of this 15-minute fair value gap right here, putting my stop loss just back below these lows, reaching back above higher prices for about a 3-to-1 R. And just like that, perfect. If we can get a pullback here on the 50 minutes, I won't then take long, continuing to see higher and higher prices. We can see price coming down into our entry. And just like that, continuing to see higher prices perfectly. So as you can see here, this is the exact trade I took on my funded accounts, floating about $8,500, making me a little over $8,000 that trading day with the Smart Train University students. So the lessons and the concepts that I'm teaching you guys in these videos, I use myself, right? I use in my own trading that makes me money. So take notes, pay attention, and obviously implement it into your own trading, and hopefully you guys can see similar results. And if you guys want to be mentored by not only me, but also my brother Spec Trades, click the first link in the description and make the investment in yourselves to join Smart Train University, and stop letting another week, month, or year go by being unprofitable, and start making the investment in yourself to make a change. Now we're going to go into our last example, which we're looking at gold. Look at our next example here, which is gold, and we can see here that we had this push to the upside during the London session, breaking back above these Asia session highs. So if you guys traded the London session, obviously price came lower, took out these London session lows, then saw this push to the upside. This could have then been your entry to then reaching back higher prices, reaching back up into this order block level. So now coming into the New York session, we're anticipating price to react off of this level of imbalance to then seeing a reversal back lower, continue to see lower prices. And we can use this bearish fair value gap as a frame of entry. So as we can see here, we have the 50% of this bearish fair value gap, keeping things very, very simple. We came higher, took out the Asia range highs, reacting off of this order block level, didn't break above the -2 standard deviation, had this breaker structure to the downside. So if price can come back into this fair value gap level, we can then take our short for a 3-to-1 R, keeping things very simple and repeatable, just like so. Let's see what happens. Price comes higher, tags us in, and just like that, after reacting off of that bearish fair value gap, price came lower, giving us a 3-to-1 R perfectly. So like I mentioned, here is the trading plan. London session is between 2 a.m. to 5 a.m. EST. New York session is between 7 a.m. to 11 a.m. EST. Anticipate a sweep of Asia highs and lows. Price should not break above the 2 standard deviation if bearish, and price should not break below the -2 standard deviation if bullish. Wait for price to give a breaker structure after taking a level of liquidity or tapping into a higher time frame pool of interest. Wait for a pullback for either a low risk entry or a reaccumulation entry. So a low risk entry would be something like down here, and the reaccumulation would be something like up here. And then aim for at least a 2-to-1 R, but I'd mostly recommend a 3-to-1 R, just in case if you're a newer trader and you guys have a lower win rate, like a 40% win rate or 30% win rate, having a 3-to-1 R is very good, because that still keeps you profitable even though you have a low win rate. But if you're more of an experienced trader, a 2-to-1 R is perfectly fine. So that's going to be it for the video. But if you guys learned a lot from this video and want even more lessons just like this, that's really going to help you revolutionize your trading and cross you over to the path of profitability, click the first link in the description and join Smart Train University. Me and my brother want to create the #1 community when it comes to creating and building profitable traders. If I could do it, if my brother could do it, anyone watching this video can do the same, and it does not have to take long. Click the first link in the description, invest in your education, put in the work with us through daily live education, watching all of the lessons plus weekly progress calls, and I promise you in 6 months to a year you're going to see some type of results. Click the first link in the description, join Smart Train University. I'm Markham. Be safe.